स्टूडेंट्स ऑनलाइन तैयारी चैनल को सब्सक्राइब करें और बेल आइकन को प्रेस करके लेटेस्ट वीडियो देखें सबसे पहले।
Hello and welcome to Online Tayari, and today we are going to discuss US-China trade war, which has been recently in news, and it has a great significance for international political economy or also for the understanding of how trade war starts and how it works. So in this video we are going to see the following questions. First is, what is trade war? You have to understand first what is trade war, and then we'll move to why US, the champion of free trade, has turned to protectionism, and what China says about Donald Trump's imposed tariffs on their products. We'll see what is the impact on global economy of trade war, and we will also see, is free trade economy good for everyone? We will see how it is not or how it is. We'll also see what is the impact on Indian economy, and lastly it had this curious question which has been in so many economic debate, that what happened when China sells US treasuries in the market. So let's start with present condition. Yesterday, what happened? US President Donald Trump announced that American trade bodies should slap at least 50 billion on Chinese imports. So basically this 50 billion will be not directly on Chinese products, it will be put as tariff. So they will raise the tariff, imagine, for 45%. So what is, previously the Chinese product were coming at 100, so now what will happen? It will cost 145. So if another seller in US is selling 135 rupees the same product, so Chinese product won't be competitive anymore, so it will be removed from the American market. So this is the basic understanding why tariffs are put on some imports. So let's see now. China is reciprocally has announced that it will put 3 billion tariff on American imports. So US does not export that much to China, but still, because US has now become a service economy, and almost 90% of US economy consists of service sector. So USA may think that it is great to boost their manufacturing basis by imposing tariff, but in reality it is not happening right now, because US economy has moved on knowledge economy, so they might be not benefited as they think. So knowledge economy. And yesterday also the news, we saw that most of the world's Sensex has plumped down to almost 1% or 2%, and it is a great loss for equity investors. So what happened? Dow Jones Industrial Average lost 724 points in one day, and that's a huge. That puts billion of dollars wiped out in one day. And similarly in Tokyo, Hong Kong, Shanghai, Seoul, all we saw that there was a plump in the Sensex. BSE Sensex, Bombay Stock Exchange, also ended at 32,597. So it was down by 410 points. So it was a chaotic move, because once it was announced, there was a nervousness in the investors. They wanted to move out their money to put somewhere where they can secure their investment and earn more profit. So they were withdrawing their money from that. And we'll see first, what is trade war? Trade war, we understand that a situation in which countries try to damage each other's trade. So they want to damage each other's trades, typically by the imposition of tariffs or quota restrictions. So in this case, what happens if a country feels that they have great trade deficit because some country are exporting too much on their in their country. So in order to balance their domestic industry or domestic market to make it competitive, they put tariffs on the products of the imported country. So imagine China now sells a product in USA at 100. So now with the new tariff of 45% or whatever it may happen, it is not clear. Imagine it is 45%. So now China will sell a product in 145 rupees in US, and now there is a company in US which sells around 135. So what will happen? This product will become costlier and consumers probably won't buy this product because there is an alternative available to this product by only 135 rupees. So they will probably move to this product. So now the Chinese imports will less and less and their domestic industry will rise, US domestic industry. So we will discuss maybe not this case because this is not as simple as we think, but yes, on a very fundamental basis this is the case. And further, trade wars may be instigated when one country perceives another country's trading practices to be unfair, or when domestic trade unions pressure politicians to make imported goods less attractive to consumers. So there can be two cases for imposing tariff. First one is if the country feels that the other country with which they have a trade relation is not following a fair trade practices. So what do you mean by fair trade practices? So here what US says that China does not follow their IPR. IPR is intellectual property right. And what is intellectual property right? Intellectual property right is a right given to an inventor for some years to earn their investment, earn their profits as a royalty. So you must have seen that in pharmaceutical companies that there is a Pfizer, and there are so many companies who have sued Indian companies because they produce generic version of that same patented product. So China, what it does, that China says if you want to open a factory in China, then you have to tell your IPR and know-how technology. And it has greatly benefited the China because China has now become competitive in all the segments where US had an upper hand few years back. So that's why US wants, USA government, probably Trump, thinks that if they put tariffs on Chinese products, probably they will give more value to their IPR and trade secrets. And what happens in a war? If one country attacks, the other country will also retaliate, and the same is going on right now. That USA has announced, China also has announced, and now there is a kind of nervousness in the world market that which side will win this war. Probably nobody will win. So let's move to now our short history of trade war. I have taken 3 examples for that. So what happened in France-Italy trade war, that after the Italy's unification in 1871 under Mazzini, it terminated the trade agreement with France. And that time Italy was not in a great position to counter the French trade. So what happened? It crippled the Italian economy, and in return France put in famous Hawley Tariff 1892, and it became clear that France has a much better position to negotiate than Italy, and it was seen that Italy became closer to Germany because Germany provided them what France was not providing them, because Italian exports were really less that time. And finally there is a trade aspect also hidden in the World War First. Second, US-Canada trade war 1866, and what happened that in that uh, Republican government or conservative government put tariff on Canada now. So Canada also in retaliation increased the tariff on US products, and the best thing they did, they started to increase their trade with Britain. So basically Britain and Canada were winners in this, and US lost this trade war. And famous smooth Hawley Tariff Act of 1930. It happened just after the 1929 Wall Street crash, or as we know, recession. So US raised tariffs on hundreds of imported products. It was basically what happened that after the recession period, US wanted to improve their domestic market, to improve their domestic infrastructure, domestic industries. They put tariffs on imported products, but it was the basic reason why Hitler rose to power or Mussolini rose to power, because already they were devastated by the First World War, and now because of this tariff they could not export their products. So their economy was crippled now, and slowly there was in entire Europe there was fascism and Nazism, which wanted to improve their economy, and thus it can be seen that why World War II even started. And now we will see why US started this approach. So we have to understand that two things, that US has trade deficit with China, trade deficit, and secondly there is a IPR issue because US does not get royalty on that. So these are the two basic assumptions of Donald Trump, which has motivated him to put tariffs on Chinese imports. So basically the US government says China had for decades unfairly acquired US intellectual property and needed to pay the price. So now this government is demanding that they need to pay the price of their intellectual property right, and that can be an understandable case because intellectual property right is not easy. If some investors is investing too much money and their time for entire 10 years, and after they invent a product and they get their patent for almost 10 years or 25 years, depends upon the product, and if they did not get proper royalty for their product, then it becomes hard to continue their research and development. So basically this case is important here, and it has some basis on that. So that's why they put highest tariff on steel and then aluminum. And this third thing we have to understand, Donald Trump came to power on the promise of bringing back manufacturing jobs back to USA. So during his election campaigns, he particularly emphasized that because of this trade deficit, there are so many manufacturing companies have moved out to either China or India or somewhere, and there is really no manufacturing jobs available in US market. So that's why he came to power on the promise of that. That's why he is delivering now. And Trump, which has already started this campaign, US first, means whenever there is a issue of trade or war, there will be US first. So they want their position to use this, that US will remain at first. Like their core agenda is that, similar to as India first. Like if you start, like imagine a situation where in India, for example, if India says that we will use only Indian product and they call it India first. So what will happen, that they will motivate every individual to buy only US product in the case of US or Indian product in the case of India. So this is the situation. It's a kind of trade nationalism. It's a trade nationalism. So this is what Trump is doing right now, and there is also that, as we have already discussed, that there is a trade deficit. Trade deficit. What is trade deficit? So it's basically companies export minus import, and if that is in negative, then that country is in trade deficit.